Good evening. I hope you all had a wonderful weekend and a nice return to your work today. Overall, the market performance today was strong. The Nasdaq had the worst day out of the three major indices, as it gained 1.2%. The S&P 500 gained a slightly better 1.47%, all while the Dow gained a large 2.32%, as shares of Boeing and Apple led the way upwards. First and foremost, COVID-19 cases surged again over the weekend, with most of the large increases being in the American South and West. The Director General of the World Health Organization said today, quote, "Although many countries have made some progress, globally, the pandemic is actually speeding up. We all want this to be over. We all want to get on with our lives. But the hard reality is that this is not even close to being over." End quote. The virus has infected more than 10.1 million people around the world and has killed more than 502,000 people so far. More than 23% of the 189,077 new cases reported globally on Sunday came from the United States. New Jersey even announced that they, quote, decided to postpone indoor dining indefinitely. The Fed started its second wave of bond purchasing today, as they have now begun to buy bonds directly from companies. While the Fed has been buying bonds in the secondary market, the new move will allow it to move to the primary market. The first wave of direct corporate bond buying saw the Fed picking up $428 million worth of debt from companies such as Coca-Cola, AT&T, and Berkshire Hathaway. Their transaction list has 86 names on it, as it fights to keep corporate America afloat amid an unprecedented economic shutdown. This was met with extreme controversy, however, as some of the companies in the Fed's bond index are foreign entities, including Verizon, Comcast, and U.S. divisions of Toyota, Volkswagen, Daimler, and BMW. The central bank has said it is well within its legal bounds to include American subsidiaries of foreign companies. Aaron Klein, Policy Director of the Center on Regulation and Markets at the Brookings Institution, said, quote, "Why is the solution buying Apple, Microsoft, and Comcast debt? Or eBay or Google? Is the problem in America that the holders of Apple stock need more help? Is the problem that investors in Google debt are likely to suffer catastrophic and unexpected losses from the COVID shutdown?" End quote. David Wessel, Director of the Hutchins Center on Fiscal and Monetary Policy at Brookings, said, quote, "Who's being bailed out here? It's certainly not the companies. The companies already borrowed the money. The people who are getting help are the people who own those bonds." According to the Bureau of Labor Statistics, nearly half of the population is still out of a job, showing the immense amount of damage that the U.S. still has to make up for. The employment population ratio, which is the number of employed people as a percentage of the U.S. adult population, plunged to 52.8% in May, meaning 47.2% of Americans are jobless. The June jobs report will have a lot of eyes on it, as investors will be watching the number of non-farm payrolls. Economists polled by Dow Jones are expecting an increase of 3.15 million, up from 2.5 million in May, which actually set a record. The unemployment rate is expected to decline to 12.4% this month, down from 13.3% in May, according to Dow Jones. Keep in mind that the unemployment rate does not take into account people who have given up looking for a job. In sum, the economy is not yet close to being in the clear. Pending home sales spiked a stunning 44.3% in May, compared with April, and was the largest one-month jump in the history of the survey, which dates back to 2001, according to the National Association of Realtors. This beat expectations of a gain of 15%. Though optimism was slightly dampened as sales were still 5.1% lower compared with May 2019. Quote, "This has been a spectacular recovery for contract signings, and goes to show the resiliency of American consumers and their evergreen desire for home ownership. This bounce back also speaks to how the housing sector could lead the way for a broader economic recovery. Still, More home construction is needed to counter the persistent underproduction of homes over the past decade, end quote, according to the chief economist of the National Association of Realtors. The entertainment industry, and specifically theaters, took another hit today, as late last week, both Warner Brothers and Disney pushed the releases of Tenet and Mulan back to mid to late August, compared to the previous expected release of July 30th. This caused AMC, which is the largest chain of theaters, to push back its mid-July reopening to July 30th. Earlier in the month, AMC announced that it had, quote, substantial doubts about its potential to continue if their doors were to remain shut. They hinted that Thanksgiving is about the threshold for how long they can remain closed without a partial reopening. Shares of AMC are down around 40% since January. After the bell, head of the Fed, Jerome Powell, said that there remains big questions on the outlook of the economy due to the struggles to contain the coronavirus. He said, quote, output and employment remain far below their pre-pandemic levels. The path forward to the economy is extraordinarily uncertain and will depend in large part on our success in containing the virus. A full recovery is unlikely until people are confident that it is safe to re-engage in a broad range of activities. The path forward will also depend on policy actions taken at all levels of government to provide relief and to support the recovery for as long as needed, end quote. Powell stressed the importance of building on recent momentum, which he said will be predicated on the path of the virus. He added, quote, many businesses are opening their doors, hiring is picking up, and spending is increasing. Employment moved higher, and consumer spending rebounded strongly in May. We have entered an important new phase, and have done so sooner than expected. While this bounce back in economic activity is welcome, it also presents new challenges, notably the need to keep the virus in check, end quote. The Fed also has cut its benchmark short-term lending rate to near zero, where Powell pledged to keep it until the economy recovers. He said, quote, in March, we lowered our policy interest rate to near zero, and we expect to maintain interest rates at this level until we are confident that the economy has weathered recent events and is on track to achieve our maximum employment and price stability goals. We will closely monitor developments and are prepared to adjust our plans as appropriate to support our goals, end quote. As we can see, it is clear that all sectors performed well and participated in the gains today. Telecommunications gained the most, posting a gain of more than 2% on average, followed by industrials and consumer goods. Healthcare was easily the worst performer, but was still in the green. Oil prices gained about $1 today after bullish economic data from Asia and Europe, but fears of the surge in coronavirus cases has kept prices from going higher. Small Cap Value had the best day, bar none, as they posted a gain of 3.64%. Small cap core stocks also gained more than 3%. Growth as a whole performed the worst when being compared to core and value. The largest gain of the day was popular manufacturer and industrial company Boeing. Shares of Boeing gained 14.36% as they had their first Boeing 737 MAX certification test flight today. 737 MAXs will be tested to assess whether the changes meet Federal Aviation Administration standards. The test flight is the first of 3 expected this week to evaluate Boeing's proposed changes to its automated flight control system. Quote, we will lift the grounding order only after we are satisfied that the aircraft meets certification standards, end quote, according to the FAA. The second best day came from recurring guest and makeup brand, Coty Inc. Today, shares surged 13.28% as it was announced that Coty has agreed to buy a 20% stake in Kim Kardashian West's makeup brand, KKW, for $200 million. The deal will see Kardashian to continue to lead all creative efforts for the KKW beauty portfolio, including product initiatives, communication, and leveraging her 300 million followers on social media. The laggard in the S&P 500 was Noble Energy, which lost 5.05% today. This move downward comes on the back of news that their partner Delek Drilling disclosed it expects Q2 gas volumes to drop 13% quarter over quarter. The second worst performer was Technip-FMC, which is another oil and gas company. Shares of Technip fell 3.55%. There was no firm-specific news that caused a sell-off in this stock. Only one major company reported earnings today, which happened to be Micron Technology, ticker symbol MU, which is a producer of computer data storage chips, such as hard drives and memory chips. Micron has been a growth monster in the past, and is up close to 150% over the past 5 years. Regardless, today's earnings were strong, as Micron reported a double beat. Non-GAAP EPS was a gain of 82 cents per share for the quarter, topping estimates by 6 cents. The revenue numbers were nice, as Micron grew revenue by 13.6% on a yearly basis. Quarterly revenue came in at $5.44 billion, which beat estimates by $130 million. Gross margin was slightly lower than expected, but guidance shows that margins will grow. Investors like the earnings from Micron, and currently have shares up 5.5% after hours. That is all that I have for tonight. I hope you have a fantastic night, and as always, I will see you again tomorrow.